Mr. Kamath, I'd like to ask you, about the overall kind of preparation for this budget. Mr. Narendra Modi said, well, difficult times, we've inherited a mess, we have to be prepared for bitter medicine. When I go through all the proposals, I'm unable to find any bitter medicine. I can, on the other hand, find a certain number of sugar-coated pills. What happened to the bitter medicine? I mean, it's almost as though by using some somewhat unexplained arithmetic, they've come to the conclusion that we don't need any bitter medicine at all, and we can just give some things away. Frankly, I'm puzzled and somewhat bewildered by the budget figures. Can you understand how we inherited a mess and now apparently we are going to stick to the same things without any bitter pills?
I think, Swami, we'll need to look at the detailed numbers, but I would guess, I heard, the line dropped, but before that I heard Deepak saying there would be a substantial number in terms of disinvestment coming. I would think that would be the key. But I also heard the finance minister say that there is cost control which they are working on. So I think between these two ends, I think they have managed to hold the numbers at the number that he indicated. And no tax increases broadly, and the deficit number I would say at a surprise to all of us. So we will need to see the details.
Okay, markets are making a roaring comeback, and Nifty, when the budget speech started, was down by 100 points, and as we speak, it is 110 points up for the Nifty. Across the board, stocks are making a comeback. The rally's largely been led by infra and banks, so policy-sensitive stocks are the ones which are making a comeback. Madhu, do you think this budget will only endorse that a structural bull market has started? Do you think this will only supplement gains further for the markets?
Exactly, Nikunj. I think we are back in business. As I was saying in the morning, this budget should not be made a event in the life of capital market. It is just one of the event, and it is not the event in that sense. And one remarkable thing about the markets is that, since the time we made the decisive bottom at 5,100, 5,300 in August, market have not fallen more than 10% at any given point of time from the high. And it clearly spells that we are in a really, really big bull market. And today has further endorsed it. So even though few people in the market were looking at something big bang, but I think what the budget has done is good enough for the market, and I'm sure the next budget, in the budget after that, we will hear something big bang which can take the markets even further from where we are.
7,700 for the Nifty. What a comeback, and what a roaring comeback. Samir Arora, can you identify a clear set of gainers and losers for us based on today's budget speech?
Well, before that, let me say a few things. First is that the budgeted deficit is not 4.1%, it is 4.5%. Only the target, that means he wants it to be 4.1, but I believe the number said 4.5. So anybody who's thinking whether the numbers add up or not, need not worry. They also know it's 4.5 is the target. Second thing is that this market is up as of today morning. It was up after Fed during the speech. It was up 18% year to date, 18% in 6 months, in which the earnings themselves grew about 7-8%, in a 6-month period. So the market got re-rated by 10% for an event which was related to finding a stable government without a coalition, and which has some history and track record. To overanalyze this today, the market is up today because it was down yesterday and day before unreasonably so, and today it is reasonably up. The point is, this market has not started its rally. It is up 10% additional beyond its
Samir, hang on there. Let me also bring on board the biggest single largest institutional investor in Indian equities, Adrian Lim of Aberdeen Asset Management. Adrian, thank you for joining us. Your first reaction to the union budget, and in your eye, will anything change in the short term?
Well, there's certainly a lot of excitement to this union budget, and I think the priorities are quite nicely laid out. There are some pockets of the market that needs attention, and this government has highlighted infrastructure, the urban segment, and these are very sensible things to focus on. Short terms, it's quite difficult to say. I mean, share price can move according to perceived positive or negative news from this budget, but the outcomes are going to be, we're going to only see over the next 3 to 5 years. So I think it's a very positive, very constructive budget. But short-term movements, short-term impact No, I don't think so, other than the share price movements. The other thing that's quite interesting is a firm commitment towards fiscal deficit targets of about 3% over the next 3 years, 3% of GDP. That's quite an aggressive target. It means cost controls. It also means a recovery in GDP growth rates. And that'll be quite interesting to see how that pans out.
Right. So we've got a big vote of confidence from a big foreign institutional investor as well. Aberdeen's Adrian believes that this has given a big thumbs up to the budget. Closing comments from Deepak Parekh and KV Kamath before we let you go. Mr. Kamath, to you first. Clearly, the market seems to believe that this is a practical budget given the time constraint or given whatever else. But the mood of the market is such that they aren't finding too many faults with the budget. I want you to quickly touch upon FDI reforms because Mr. Parekh raised the point about the fact that he could have gone the full distance with defense, with insurance, probably half-hearted steps. What is your view on the FDI reforms that we've seen in this budget, Mr. Kamath?
Again, I clearly see a statement there that FDI is going to be a major tool in terms of pushing development in the country. And as intent, you have had the insurance number relaxed from 26 to 49%. So we need to read into that, and I think the market is also reading into this, reading into the REIT thing. To me, that's a big thing. And one other thing I'm not sure came out in our last 10 minutes is this issue of long-term funding for banks, particularly to fund infrastructure. And I distinctly heard the finance minister say that we will look at CRR and SLR at lower levels for this activity. I think it's a big change in terms of a big challenge we have had, lack of long-term resources and the funding cost. So there is a whole lot of, I would say, things which have been heard and articulated on. So I would end by saying that it ticks all the boxes and shows us a government which is willing to listen. Now, how will it get into execution stage? We will have to see in the next 6 months to a year. Right. Overall, I'm very happy with what has been articulated in this budget.
All the boxes. It does tick all the boxes, but I'm going to take a final question to Deepak Parekh. This budget was supposed to be the game changer. It was supposed to be at least the first step towards a double-digit growth. Realistically speaking, do you think we will see a double-digit growth in the next 5 years of this government? And is this budget the first step towards it?
I think they are aiming at 8% growth in 3 to 4 years. So let's not talk about double-digit growth. But I think if you ask me to sum up the budget, I think it's the first step of Achhe Din Aane Wale Hai.
First step of Achhe Din Aane Wale. Mr. Parekh, Mr. Kamath, thank you so much for joining in with that perspective. Professor Bibek Debroy, would you agree with that? Would you agree with the view of a panel here that it's the first step towards Achhe Din Aane Wale Hai?
Well, it depends on how long the step is. And the reason I'm disappointed is reforms. I'm not talking about reforms outside North Bloc and Finance Minister's purview. Reforms mean an end to discretion. Reforms mean harmonization, standardization, rationalization. Be it on taxes or be it on expenditure. Do I see that happening in this budget? The answer is no. And therefore, I'm a bit skeptical about reforms defined in these terms, not in terms of FDI and big things, but things that are the staple diet of finance ministry, expenditure and taxes. I think there's still too much discretion floating around.
Mythili, you want to comment on that?
Well, I must say that I'm pretty disappointed. I must be perhaps the only doubting Thomas so far because I'm rather disappointed. But I felt there's no big picture, there's no larger vision. It's more like a clerical recounting of a whole lot of schemes. And the biggest doubt of all remains on those budget arithmetic because the numbers, even in fact, as far as the budget bank recapitalization figure of 11,200 crores, almost everything is unchanged. It's as if Mr. Jaitley did not have time to devote to the budget exercise.
Right.
And as far as big ticket items are concerned that Vivek talked about, labor reforms, judicial reforms,
right.
This was the one opportunity for the government to have that big reset. I see no reset whatsoever.
All right, it isn't the reset that Mythili wanted to see, but joining us, a very special guest again, Sunil Munjal joins us from the CI headquarters. Thanks very much for being with us, Mr. Munjal. It's a divided house as far as Mr. Jaitley's maiden budget is concerned. Do you think this is the big game changer? Is this the big reset?
I think what he did was cover a very wide spectrum of issues which have been raised by industry, agriculture, civil society. He kind of touched on all aspects. So from that point of view, I think it was broadly very good directionally. It kind of tells you what the government's intent is over the next few years. I felt, however, well, by the way, I think this is the longest speech I've heard in a very long time for a budget. So which is why maybe that 5-minute break was a good idea. But on a more serious note, I think the good thing was talking about deepening and widening the debt market, provisioning for risk capital for startups, encouraging fund managers to move into India. If India wants to be a financial center, you need to have resident fund managers sitting here. So there was a whole lot of stuff which I think is very good. There was not enough detail to give a very detailed comment on some of them. For example, I'm still not sure how he's managed the numbers, because he kept many of the old numbers which had been announced, which would be tough to actually make up, considering the slowdown that we've had for a while. He has, however, said he will retain those numbers of revenue collection, etc., while accepting a 22,000 plus crore loss on direct taxes. So I'm only assuming that the divestment numbers, etc., might go up beyond what we are hearing here. If that's the case, it sounds absolutely fine. There was no single big bang announcement as some anticipation had got built up earlier. But if you take a step back, I think it's actually
right, Mr. Munjal. Adrian, did you have any doubts or unanswered questions before the budget, and do you think today's budget speech has addressed some of those questions?
Well, I think what happens in this budget is it's basically provided a want event where it provided continuity to the commitments of the government so far. I agree with most of the speakers. I think it's a good first step. But the second more important step is how this budget gets executed on. I am not so fussed about whether some of the so-called big bang adjustments get reflected in this budget. I think some of these things would be addressed in subsequent policy or parliamentary proceedings. And there are many things off budget that can be done. So I remain positive about the direction that this government is going. But as always, execution is the most important thing. And, you know, this government's less than 50 days old. So I would give them a little bit more time on that front.
7,700 plus for the Nifty, check that one out, and the small cap index is appreciated by about 3.5%. It's a party, it's a rising tide. Markets have reversed, and the Nifty has, Nifty when the budget speech started was down by about 100 points. Now Nifty is trading with the positive bias of 120 points. Nilesh, now that the event risk is over, do you think the natural trajectory of the market is to go higher, and soon we could see a print of 8,000, maybe 8,500 on the Nifty, Nilesh? Okay. Adrian, in your portfolio strategy, based on what you've heard today from the budget speech, will anything change?
No, unfortunately, it won't. The companies that we like, we think will continue to do quite well. Some of these budget or reform that have been announced would take some time to percolate through the market. And as that happens, we would reevaluate some of these things going forward. But as of now, no, we would stick to what we hold.
Adrian Lim, thank you so much for joining in with that perspective, really, from Singapore. That's the view, the big view coming in from Aberdeen, really. But Swami here has got a question for Mr. Munjal. Swami, take it away.
Mr. Munjal, some people have said, you know, we don't really see A, any big 5-year vision, and B, any real investment push. So on these two big items, is there anything that you can see which some of us are missing?
So on the investment side, the obvious one was the investment allowance. But what he also did, I thought, was encouraging risk capital for startups, venture capital, deepening the debt market. I think is very important for the investments to scale up. Also, supporting Indian bonds overseas, I think is a good idea. He specifically talked of 4 or 5 industry sectors like the house construction, low-cost housing, infrastructure, those corridors and building those urban centers. I think each of these, and of course the industry clusters, 20 industry clusters, I think each of them is a boost to the economy, and that's what we need right now. There is no one single thing which can address a slow economy. We need to do multiple things. The other good thing I thought he did was talk about stability in policy making. I'm still not quite clear what he said about the retrospective amendments. Have they been taken care of? Will this new commission which gets set up, will it actually resolve them, or is he talking about such issues in the future? That bit was not clear to me.
Mr. Adi Godrej of Godrej Group also joins us. Mr. Godrej, good afternoon to you and thank you for joining us. Do you think today's budget has ticked all the boxes? What is your first take? Thumbs up, thumbs down?
I think generally it's a very pragmatic budget. I think it should address a lot of the issues on lack of investment, on growth and other areas. He's taken some steps to correct excise duties and import duties which have affected businesses in various sectors, including some of ours. He has very clearly stated that he wants to bring in GST. He has increased FDI in the two important sectors of defense and insurance. So I would say it's a practical budget, pragmatic budget. It will help growth, but there were no very revolutionary points in the budget pronouncements. So generally welcome, and I hope that in the coming days, both on policies during the next few months and then on the taxation sphere in the next February budget, there can be even more changes for promoting growth and investment.